model that has been prepared to assist the financial needs of your company in order to maximize your profits and to enable business growth. The model under discussion is for logging business. The main elements of this model are revenue analysis, summary, income statement, cash flow statement, balance sheet, project evaluation, sensitivity analysis, and the dashboard. Moving on, we have the input sheet, which consists of all of the assumptions relevant to your business. The sheet contains inputs when change impact calculations, therefore, the changes are applied to all relevant sheets. For instance, if I change this price from 200 to $300, this change will be applied to all the relevant sheets. Next, we have the revenue analysis sheet. This sheet has been prepared to calculate monthly revenues of your business. It calculates the revenues for the sales, for the services, and it also calculates the cost of goods sold and cost of services. Next, we have the depreciation and amortization tables where you can calculate the depreciation of each of the fixed assets for on monthly basis and also the amortization of all the external fundings. Next, we have the startup summary. This sheet provides you and your investors with an analysis of a new startup's investment requirement. It helps the business to present a snapshot of the company to prospective investors and helps to raise capital. Next, we have the income statement. We have prepared both monthly and yearly income statements for 5 years. We start by calculating the gross profit, then we move on to calculating the operating profit, then the profit after taxes, and finally the net profit. 5 years. Next, we have the cash flow statement. This sheet is used to predict all the cash ins and cash outs of the company. Moving on, we have the balance sheet. This sheet shows all the assets that are owned by the company and the equities and liability that are owned by the business. Moving on, we have the break-even analysis. In this sheet, we have calculated the break-even sales for each year. This sheet also has a graph. Next, we have the project evaluation sheet. This sheet is very important as it uses the weighted average cost of capital to calculate the net present value of the company and the internal rate of return. This sheet also has the present value of the cash flows for the 5 years and also the terminal value of cash flows. Next, we have the sensitivity analysis sheet. This sheet calculates the net present value, internal rate of return, and payback period of the company under three different scenarios. Moving on, we have the KPIs and ratios. This sheet is very important as it uh, analyzes the financial performance of the company using different ratios like profitability, liquidity, solvency, and efficiency ratios. Finally, we have the dashboard. The financial performance of the business can easily be viewed through these effective visualizations in the dashboard. Thank you for watching this video.